Hello everyone. Welcome to another session of Paklaunch. Always a pleasure to be hosting sessions here. We always get to have interesting topics. Today, I'm very excited because we've got a very special guest, Asher Siddiqui. While he'll give his own backdrop, but for me, it's very special because he's also an investment committee member of Zayn Venture Capital and also a board member of my fund, and has been a huge guiding light in terms of teaching me how to manage funds and the whole complexities of what goes on behind the scenes. So he's my personal soundboard. So we're happy to have him here. So Usher, pleasure to see you at the Park Launch community. I know you've been in the backdrop meeting with Ali, but I'm glad everybody else is going to get to get your insights on the venture capital space. So look, would love to start with talking about your background. Would love to I would love for you to enlighten people how you've been part of this industry in the early days of the, I would say, the super wave of venture capital in the 2010 period where 500 startups launched. And then how you made your way to the MENA region. And I would love to hear more about Sukna Ventures and your MENA strategy. So please, over to you.
Great. Well, great to be here and good to be doing this with you, Faisal. So my name is Asher Siddiqui and I'm from the UK and but I have a dodgy accent because I'm an expat brat and I went to, a third culture expat brat and spent most of my childhood in Middle East, Africa, Asia, and then the UK. Um, I guess I'll skip to the career part. I graduated in 1998, and for the first 8 years of my career, I was an entrepreneur. And now I realize I was also a digital nomad and a remote worker. So I spent the first 8 years of my career sort of going from the UK to the US. Went from the Midwest, explored the East Coast and the West Coast, and then went back to the UK, to Europe, and then ended up in Dubai. And what I was doing was I was a struggling entrepreneur. I wanted to work for myself. I was committed to being a tech entrepreneur. I was a Java developer, and I was building applications for B2B applications for customers and getting them to sign up for long-term contracts. But this 8 years, was like sort of a up and down journey. I had some sort of moderate successes, and then I also had some, flame outs. But I felt like I was drifting. I came to Dubai, and I tried to explore, whether Dubai could be an interesting place for me to sort of hang out. This is around 2004. Around this time, I was sort of involved in a project with CNBC Africa. So I was helping my uncle actually launch CNBC Africa. And just as I was about to do that, I met this girl in Dubai, and I realized that I didn't really want to move to Johannesburg. Job opportunities in Dubai. I actually got really, really lucky. The mergers and acquisitions team of a new unit of Etisalat called Etisalat International. So I joined in 2006. 3.5 years later, I was, co-head of M&A, and 4.5 years later, I was global head of M&A. I stayed in Etisalat for about 10 years. I led and closed about $15 billion worth of M&A transactions, and opened up a different world to me. But around the time that I got to sort of like 2011, 12, when I was already like a vice president and sort of like fairly senior in the firm, I realized that by this time, that girl and we got married and we now have two daughters. But I started to think about going back into my entrepreneurial sort of, tech world. That's when I kind of realized that this investment thing is something that I really, really enjoy. And so I started working on the corporate venture capital program. So I actually built the first version of the corporate VC program, and now one of my friends, Kush, runs the EN Capital's venture arm. So that's kind of cool. But after 10 years in its slot, I realized that maybe corporate venture wasn't for me. So in 2016, I left, and then I moved to the Bay Area. And then I started working with 500 startups. So as part of the management team, I was hired by Dave, who you know very well. And I sort of co-led the firm for about 3 years, and helped to bring in significant amounts of capital and helped to structure the firm, or was trying to help to structure the firm to make it sort of an institutional fund builder, fund incubator. After about 3 years there, I kind of decided to refocus back to the Middle East. So 2019 onwards, I was moved back to Dubai. And since 2019, what I've done is I've actually helped to create or incubate about seven venture firms, including Zayn and one of the projects that I was working on was with one of my friends, Faris, for Middle East. And I thought, okay, who's the best investor that I know that is, differentiated in the Middle East? I thought of Waleed, who was another friend of mine, Waleed Abdullah. So I kind of put Waleed and Faris together. And then, because I'd introduced them, I kind of joined them for the journey. So that's how Sukna Ventures sort of came about. And yeah, that I guess brings us full circle. We've closed our fund. It's a $50 million fund one, and we've deployed into about 20 companies, and happy to talk a little bit about that.
Yes, so we great backdrop. Tell me, what your fund strategy is, what areas you invest in, and then we'll dive into
Hmm.
the general MENA region. We talk about macros a
Yeah.
lot, and I think the market has
Mm.
changed. So I would love to get your take on that as well, on what you're
Yeah.
seeing in the market and what you see different this cycle.
Yeah. So Sukna Ventures, our thesis is I'd like to call it digital infrastructure. I think that's kind of digital infrastructure that's driving sort of the digital transformation of traditional industries and sectors across the region. That's kind of like our core focus. We're early stage fund, so our sweet spot is seed. We will do as early as pre-seed, and we may go as late as sort of pre-Series A. Very, very rarely will we look at Series A unless it's follow on into a company that we are in or we're following. So it's a little bit of our our thesis. In terms of our portfolio, just to give you a flavor of what that digital infrastructure looks like. So out of the 20 companies, we have, a third of them, I would say, are fintech because financial services is a growing space. We also have, ed tech and, other sort of future work themes there. But if I look at it from a tech perspective, technology perspective, I would classify six of our companies as, sort of AI companies, because that's kind of what they are. They're like product first businesses in various sectors. And I'd say about, four or five of our companies are actually deep tech companies. So roughly about nine of our 20 companies are either sort of AI, deep tech, and maybe some of both in various sectors. So yeah, that's kind of like from a sector point of view. And then from a geographic point of view, I'd say about, 30% of our companies are Saudi based, 30% of them are UAE based, and the rest is sort of divided into sort of Egypt, mostly Egypt, 25% Egypt, and then we have a small international portfolio that's sort of the US, Europe, that's also targeting the Middle East market.
Great. So, Akshay, you've been in this industry for many cycles. I think a
Hmm.
lot of our audience, especially the aspiring entrepreneurs, you've seen the dot-com bubble, you've seen,
Mm,
post to 2008 crisis, and then obviously the most recent one, 2020, right? What
mm.
do you see different this particular cycle? I mean, are you seeing still the same type of enthusiasm as 2021? Since most of our audience, I think, is more used to
Yeah,
the 2021 cycle, would love for them to kind of understand that how somebody that's seen so
yeah.
many cycles views what's kind of taking place.
Yeah, sure. So my first crisis was actually in 1997, the Asian
Right.
financial
Long
crisis,
term.
and I was a founder. Yeah, that
Yeah.
was a long time ago. It was kind of like so I had a taste of what the global financial crisis looked like, but just from a contained Asia view. And the reason why I was exposed to it was because I was at university and I was working on a male skincare product. because apparently in Europe at the time they didn't believe that men wash their faces or put needed cream. But I was at university, and my suppliers were in Asia, and they start with this conversation started out really well because they were able to provide us with amazing financing terms and then credit terms, and then all of a sudden the financial crisis happened, and there were liquidity constraints, so that kind of evaporated. Um, and then, of course, I was very excited about the dot-com boom. I sort of, moved to the US, and I was looking for opportunities there to build. And I had some sort of early traction where we got, his first product up to like 80K and 100K in ARR in a couple of months. So that was very exciting. And then we saw the dot-com bust. We saw, angels, investors sort of evaporate. Um, so that was kind of like an interesting time. But obviously the internet was early. Internet penetration was sort of kind of very growing very, very quickly, but still quite small. So, you needed sort of long-term perspective. So that's just sort of from the US perspective. And then I guess that fed into the global scene over time. But if I think about the Middle East, coming back to the Middle East, since I've been there for almost 20 years, in the tech ecosystem, my first foray into tech in the MENA region was actually in 2004. One of the projects that I was working on was helping to set up the MIT Entrepreneurship Center, and we ran a 50K business plan competition in Abu Dhabi, 2005. But we realized it was too early. There wasn't enough of an ecosystem, and there was not enough talent available that was willing to take the risk because there wasn't enough capital available. So that sort of experience for me was quite helpful. In around 2010, 11 ups pop up, and that was sort of interesting. There was already a couple of VC firms there. So, Beko, MEVP, these are some of the older original OGs of the VC ecosystem. And Imena started around that time. We backed Imena. I sat on the investment committee, and we invested in a bunch of those companies. So that market kind of grew. And we noticed something then, which was we put a little bit of money to work, and not just us, but there's a couple of VC firms, and then there was us, and we put in some investment into the ecosystem. And what we found was that, at Etisalat, we're sort of obviously we were a mobile operator in the UAE and in Pakistan and in Saudi Arabia. And what we found was a little bit of capital went into these ecosystems. And then we started to see that we were tracking the marketing spend and marketing campaigns of our mobile internet plans. And around this time, you had the iPhone that had launched. So we had this iPhone. The iPhone people bought the iPhone, but they weren't necessarily buying the data plans. And then we saw that, maybe 9 months to 12 months after sort of investments had been made into these startups, all of a sudden we start to see an uptick in mobile penetration, sorry, data penetration. So people started to buy mobile data connection. So they had these very amazing, powerful supercomputers, little computers that for that time in their pockets, but they weren't using it beyond Wi-Fi. But because there were no applications, local applications, most of the applications were sort of, US applications or European applications. And so when we started to see that, that was kind of an interesting aha moment for me personally, because I thought, okay, so the limiting factor here right now, it's not the talent, because the talent actually existed. All these people were coming out of companies and building startups, but the problem was the capital wasn't available. And so that's kind of like where my venture capital journey kind of started. So when we fast forward and accelerate to today, so actually maybe I'll talk a little bit about the pandemic. So 2019,
Hmm.
leading up from 2019 to here. What was really, really helpful about the pandemic, and I know that was like a very painful period of time for most people on the planet, but for the tech ecosystem in the MENA region, the pandemic was actually quite helpful, enormously helpful. There's a couple of things that were going on before the MENA, before COVID. Um, there was a desire for a lot of the government to support the regional local tech ecosystems. So they were looking to deploy capital into their local ecosystems. So that was helpful, but it wasn't quite there yet. And also when you think about, so when you think about consumer demand, okay, yes, so people were pretty digitally savvy. We had very high mobile penetrations rates and internet penetration rates. But when you think of it from a B2B perspective, then, governments, or sorry, a lot of the companies weren't really interested in or weren't comfortable with taking the risk of working with startups and local tech solutions, which would then really drive their digital transformation. They would work with sort of big global players, which wasn't really, to be honest, digital transformation. But what happened during the pandemic was that, this is my personal opinion, is I started to see a shift and a change in sentiment with some of the people that I know who sit on the boards of large corporates, who are C-level executives at some of the large corporates, and they're sitting at home. And the only way that they can order medicine, the only way that they can order groceries or they can get things done is through their mobile phone. And then they were also forced, government agencies and corporates were forced to digitize. I remember speaking to somebody who worked for a government agency. He was in a consulting background, he moved from consulting into government agency. And he told me that, he started a couple of weeks before the pandemic, and there were desktops that were in the government agency, and he wasn't allowed to have a laptop or mobile phone or access to his, work environment that he could take away. He had to work at the office. And then during the pandemic, they were forced to loosen up those rules and allow people to be able to, work off their laptops. So that changed a lot of mindsets. And that was super, super helpful. So what happened was that, we had this sort of perfect storm of capital that was being set up. Saudi Arabia was set up two, fund of funds to back VC funds. And then you had the pandemic where all of a sudden the business environment changed and digitizing everything, all sorts of workflows was important, all sorts of processes. The way you do business needs to be digitized. And so that kind of led to this boom and this excitement, which was obviously phenomenal for the industry. It accelerated Saudi Arabia as well, the Saudi ecosystem. Because now it's as big as the UAE, and so like if the way I think about the three ecosystems, and I think it's kind of reflected in our portfolio as well, which is Saudi, UAE, Egypt, and then of course the rest of the Middle East. We have a lot of activity there, but these are really the two or three big ecosystems here. A lot of capital. Now, we had like a boom in the Middle East, and then we had a slowdown and a lot of challenges in Europe, in the US, even in parts of Asia. But what was interesting was that because of the environment in the UAE, there was sort of that exodus from Europe or other parts of the world or Asia. Dubai, Abu Dhabi were sort of like beneficiaries of that. And then the infrastructure spend and the diversification that's going on in Saudi Arabia has meant that there's a lot of opportunities. And so there's been a lot of influx of talent into both these two countries. And the challenges in other markets, these two have been the beneficiaries of. So I guess a lot has happened, and I think that I'm trying to sort of cram everything together. But I guess the point that I'm making is that yes, that 23, 24, the environment was really, really challenging for VCs globally to raise capital after that sort of initial uptick during the pandemic. But but then there's been sort of a bifurcation where I see that things were still challenging in Europe and US in, say, 23 and 24. But in the MENA market, there's a lot of capital. There's a lot more VC firms today, early stage. So there's a lot of capital available. A lot of startups get funded. I know that I talk to some founders and where they complain about the fact that, there's not enough VCs. And I think I agree with them. There aren't enough VCs. If you think of it from a percentage of GDP per capita, so that goes into sorry, the GDP that percent of GDP that goes into tech, into venture. It's still very, very small. Like US is close to, just under, say, 1%. And, here we're looking at, 1/10 of that. So there's still room to grow, obviously.
100%.
Um, yeah.
It's
And
a,
we need
it's an
we need
evolution.
more. Yes, yes, it's an evolution, and we're sort of at the beginning stages of that evolution. What is exciting is that there are dozens of VC firms early stage right now. I actually think that we need more. We need dozens more early stage venture firms, but we also need right now a lot more capital to go into Series A and B because there's sort of like this bit of a Death Valley situation there. For us, we're followers into A's, right? So we're looking at that market and we're looking at that space, and we're not seeing enough investors in that sort of segment. But
So,
sorry,
so
I've been
I'll,
rambling here.
no, no,
That
no.
was a
It's great.
long-winded
Look,
response to what you
I
were.
think no, but I actually enjoy detailed responses because I think in this day and age, what happens is people don't have context of what's happening. So I'll give you an example. Like, this is great for founders in
Mm,
Pakistan. People get very frustrated comparing India to Pakistan or the MENA region. And I keep explaining that, look, there's lag effects. Capital will flow to markets, one based on the infrastructure development. So one of the key components why
yeah.
Pakistan was delayed was because of the delayed 3G and 4G launch. As if you
Hmm.
recall, that was in our deck
Mm,
back in 2020,
mm,
that why the market opportunity exists,
yeah.
right? So consequently, like our market is in a lag compared to India and the MENA region. So
Mm,
I think having that context is important because people just assume that the US and the MENA markets have always been this vibrant, right? This was a
mm,
step-by-step evolution. There were failures in all of these
yeah.
markets, and then you had rebounds. I think that was a great context. So I'll jump to your thing where you're saying, there's need for growth capital. So look, I mean, even for me, like as I look at
Hmm.
potentially a next fund, right? And you know me, I'm like obsessed with thesis.
Yeah.
Unless I have a thesis, I don't want to go into it. So one of the major
Mm,
question marks I've been having for the last, I would say 12 months, where I've been diving
hmm.
deep, is that do I grow a growth, do I do a growth stage fund? Because obviously that's the gap that's out there, right? And it's like
Hmm.
almost shooting fish in a barrel when you do that. But then when you do a growth fund, obviously then the quantum of returns that we're used to in early
Mm,
stage of first check diminishes, right? But then at the same time, it's so disruptive that the world that we've entered with, I would say, the convergence of AI and blockchain, that at times the
mm,
opportunity is like almost like you have this growth stage opportunity, but then you've got this new fundamental
mm,
backend data level
mm,
change happening in the system where the
mm,
opportunity to make a bigger return exists, given that the whole infrastructure has to be built in our region,
yeah.
right? And so, how would
Mm,
you take that dichotomy? Like, I mean, if you from your perspective, given that you've done AI
mm,
deals, and my thesis is all like blockchain, AI,
hmm.
and fintech. So,
Yeah.
I'd love to kind of get that because look, many times when I go out there for like e-commerce platforms, that frankly that opportunity
Mm,
for a lot of funds, they can't even fathom that that opportunity still exists, right? Given that in places
mm,
like Pakistan, that's happening now, whereas
mm,
platforms are raising that Series A, Series B level, because most of them had
yeah.
this done like in the early 2010s and 15s, right?
Hmm.
So what is your assessment of that type of a mindset? Like where would you go if you had to go today? Again, keep in mind the growth stage obviously has diminishing returns, right? In terms of once you entry points, and then the size of the fund has to be
Yeah.
massive, like 300 billion.
What you're sort of targeting, right? But so one of the things that I would say is when you're thinking about growth stage, you're saying diminishing returns or sort of maybe not as attractive returns. It really depends on what type of returns you're looking to provide. So you know I do early stage. I kind of like early stage. but need to be very, very patient. And from a multiples point of view, potentially very, very attractive, multiples, which you require a lot of patience. But I'm by the way, I'm sort of doing some research with the University of Michigan right now on the emerging venture sort of landscape. One of the research we're doing is on emerging VCs, and the second sort of part of that is around economic development and ecosystem development. And so, what was interesting is we looked at data from 1980 to today, and what we found was that growth stage, which is kind of obvious, but growth stage venture was consistently higher distributions, provided
Yeah.
higher distributions than early stage.
It's
So when you
de-risked.
think of it,
It's
yeah, so the point is, like, is that a bad opportunity, a good opportunity? I think it's just a different sort of opportunity set for a different maybe class of investors. So the way I think about it is, to sort of answer your question, and maybe I'll answer the MENA question and then the Pakistan question. So in the MENA region, one of the challenges that I see, and one of the things that I find quite disappointing is, plenty of VC firms. We need more professional investors in the venture space. What I find challenging is, the valuations are sort of out of whack. We see valuations in the US and Europe, which are like at this point, and then typically our market is much smaller, so we expect that the valuations will be sort of smaller because it's a function of the market opportunity as well. But then we see the valuations are the same, and it doesn't make sense every now and then, and we see these valuation that we turn down, these very high valuations, and then we see family offices or individual sort of investors that maybe aren't professional investors come in and sort of like screw up sort of that dynamic. I wish that those non-professional investors, those family offices, would sort of maybe go further down to a sort of growth stage where these opportunities are de-risked, where there's a much closer time horizon between where they invest in and when they get their money back. So like post A, this sort of, Series B, this sort of makes a lot of sense. And for professional investors to do early stage. I would love to say that that should be the case in Pakistan, but unfortunately, in Pakistan, you have like no capital, almost no capital. It's kind of crazy to see that a lot of the investors in there's like maybe a handful of VC firms in Pakistan. And it's interesting to see like a lot of UAE-based VC firms and Saudi-based VC firms and other international investors sort of are quite present on a lot of your portfolio companies. Um, and at the early stage, which doesn't make sense in under normal circumstances, but the reason why they're there is because there's this sort of lack of depth. So for you, there's still a problem at the early stage. So if you wanted to pursue an early stage another early stage fund, I think it makes a lot of sense. Um, but I'm not sure if the LPs are there, the investors are there to support that. And I think it might be easier for you to go for a growth stage fund, which then, maybe lower multiples, but maybe higher distributions, which might actually be more attractive for like Pakistani and investors. Yes, sir.
But
Yeah,
look, you know me, I'm always I say things that I
yeah,
shouldn't be saying, right? But being a
yeah.
Pakistan-focused VC, I have to be true to the cause, right? Look, at the end of the day, this isn't a charity, right? And so look,
Yeah.
this comes down to even you and I.
Mm,
I'm personally not an impact investor. I think any dollar you put into these markets has an impact. So at
sure.
this, so I think that part gets addressed, right? But my bigger issue is that look, the focus, and Asher, I think you subscribe to the same ethos. It's not about raising a fund just so I can get management fees and sustain my
No.
lifestyle. It's more about keeping a track record and getting returns from my
Mm,
investors, right? And we
mm,
talked about this early on.
mm.
Initially, we can do all the hype we want, but ultimately, our performance is what counts for us to continue to raise funds, right? So
mm,
personally, I can tell you, and I've obviously had to put my personal capital into the VC
yeah.
fund, right? I mean, it makes no sense in the type of returns that look on a 10-year curve, you would get maybe, I mean, I think we've made some good calls in Zayn VC. I
Hmm.
think we'd probably still end up with shaving off the currency devaluation, probably a 4x, maybe if we're lucky 4.5x because of that currency deval element.
Mm,
But I've made better returns in the S&P 500 and specifically concentrated on the Magnificent Seven and Bitcoin and
mm,
Ethereum, right? So me personally, do I continue to want to commit 2% or 1% capital to the next fund? Because obviously that's my
mm,
skin in the game, right? So that
mm,
question mark does come, and I think that's the question mark LPs are having, right? That
mm,
they're seeing that the returns in these markets may or may not be. Again, I'm just being the devil's advocate
mm.
because we
Yeah,
can
yeah.
we can always sell the dream, but now I think all the funds in our region, especially Egypt and Pakistan, have to
Mm,
sell the performance. But by the way,
mm,
with that said, I'm going to say
mm.
that the
Yeah, yeah.
performance is showing up in portfolio companies because, as you mentioned, is patient capital. But the question is, do
Mm,
the LPs have the wherewithal to hang in there? Because it may not be a liquidity event in 5 years, 6 years. It may be a 9 to 10 years, right? And look, I'm an
yeah,
LP in that in the first fund of 500 startups, and they're still doing
yeah,
distributions. I mean, they've done some
yeah,
distributions, and it's been a
yeah.
decent performing fund, but
Mm,
the distributions still haven't happened all the way yet, right? From 2010, I think their
yeah,
vintage was 2010, and that's a US focused
yeah. So
fund.
it takes time.
Yeah.
Yeah. So it takes time. You're when you're looking at sort of early stage, yeah, this is a 10 plus 10 to 12 year, if not 14-year journey for investors. So um, it does take time, but is it worth it? Well, so
I mean,
when
given
you
that,
think
given the
about
type of
asset,
returns we've had in Nvidia, right?
yeah,
Even if it was overpriced, right? I mean, people
yeah,
that went in 2018, there's a publicly
yeah,
traded entity with liquidity, right?
mm,
Even Bitcoin and Ethereum, again, I'll
yeah,
say that from that perspective, you can move $1 billion in and out instantaneously
yeah,
if you have the patience and nerves. So, and then
yeah,
same thing is happening with AI, even if it's in a bubble, right?
yeah,
Were these markets just too late in tech adoption, primarily not because of the founders, but
mm,
because of the government? And I'm not saying that,
mm,
maybe venture capital as we knew it was different, but given the
hmm,
quantum of debasement and money printing, how late we are in the cycle, are
mm,
these markets making sense for LPs still? And I'm particularly talking about Egypt, net importers of energy like Egypt and Pakistan, not necessarily.
mm,
Look, we also know that in MENA, it's the Saudi government that's stepping up. It's the Emirati government that's stepping up to create an ecosystem.
yeah, true,
In
true.
Pakistan and
Yeah,
Egypt, we're looking for external investments, right? And external investors
yeah,
are, listen, guys, you guys aren't stepping up. So why should we step up,
mm,
right? Um,
mm,
so I guess I'm trying to question the
yeah.
dichotomy of applying, the same rules everywhere in the world.
So I'm going to say a bunch of things, but one
No,
one
no,
thing I will
please.
say is that with Egypt and Pakistan, I think what is interesting is that Egypt has relatively more stable government relative to Pakistan, and you see that as a venture investor, I see that because I see a lot more opportunity in Egypt than I see coming out of Pakistan. There's a lot of problems in Pakistan that go beyond that, but this lack of political stability is a major problem. Uh, and then of course the lack of infrastructure, whatever. But that could be an opportunity. But so here's the thing, Faisal. I think it is unfair for you to compare yourself to your LPs. And I'm not taking anything away from your LPs, but my point is you're a professional investor. Um,
Sure.
Great, and you understand the S&P and you understand these markets. You know, I am a professional VC investor. I can tell you I'm the worst investor when it comes to public markets. The best thing that I could do and should do and have done is to just, buy into the S&P 500 and sort of just track that market. So what I'm trying to say is that, professional investors might be able to sort of generate higher returns from the market because they're professional active investors. But for most investors, that are not professional investors, and this is not what they do. For them, they have to think of it from an asset allocation perspective. So
Sure.
their job is to basically put money into sort of index funds like I do, put money into professional managers who would then sort of provide them with better returns. And then when you look at that from a long-term perspective, then those investors, according to data that I have seen multiple times over the long term, you have, the venture market, the venture asset class actually has provided better returns over a long-term period compared to the S&P. The problem is we're playing with the laws of averages, but then the issue is that as when an LP comes in and invests in a fund, they're focused on that fund and the portfolio returns of that fund. And what I just said is based on the entire venture asset class, which is kind of unfair. So I guess what I'm trying to say is this: every investor that has capital to deploy should be deploying it in like what makes normal like sense, on a risk adjusted basis. You put most of your capital into lower risk asset classes. But venture is an important asset class, and it's a growing asset class. And it is what is venture anyway? Venture capital is
It's
investing in
early
the
exposure.
future.
Yeah,
It's
100%.
it's early exposure into the future. So like I think that it makes sense to have a very small percentage of your capital being put into venture, which is really the future, which is high risk. So you may lose it all, that won't break the bank. But at the same time, if you make the right bets and back the right managers who know what they're doing, then you should get good returns. This is capital that you don't need tomorrow. This is capital that you are okay with waiting for, 12, 14 years. So the point that I'm making is that um, from an investor point of view, I think it doesn't matter. Like there are investors for every one of those asset classes.
No, fair enough. I mean, I
And
was
then
just
in
being the
Pakistan,
devil's
yeah, yeah,
advocate
yeah, no, no,
from
absolutely.
that
I
perspective.
appreciate
I
that
mean, and look,
because
I mean, look
you're
in.
basically saying you're basically saying what a lot of investors are saying
I
to
mean,
you when
if
you
I were to
were
deploy
raising money.
my
Yes.
even my
Yeah.
own capital, right? I mean, in all honesty, even in 2020, I'm bold enough to
Mm,
say this right here, right? I told a lot of my investors in 2020. I think you recall this conversation
yeah.
as well. I said, look, you should put 15% in Bitcoin and Ethereum as a hedge, and then the
Mm,
performance of this fund would be great.
yeah.
And at that time, most of them thought that investing in Pakistan is less riskier than investing in like the base layer of the internet digitization, right? So again, I mean, I when I go back and I look at it and I track the fund performance, if I allocated that amount, yes, I would have gotten returns in that right mix that were, and to me,
Mm,
Bitcoin and Ethereum or blockchain and AI are part of what's
mm,
happening. They're not fringe investments. In fact, I think if you
mm,
don't understand those components, it's difficult to invest in tech with a holistic view, right? But
yeah.
are we going through a hedge fund moment? Because look, hedge funds, if you look at most hedge funds, right? After the 2008 financial crisis, every one of their
Mm,
mother was able to raise a hedge fund, right? I had multiple
mm,
friends that had multi-billion dollar funds that started off
yeah.
with small $50 million funds. That's part of the bubble, right? And then when you came back and saw the performance from 2008 and looking back, this was back in,
Mm,
2009, 19,
mm,
as a most funds did not even beat the S&P index. So you were better off just
yeah.
putting money in the SPX index versus
Mm,
going into hedge funds, right? So is that something that may have happened because so much capital went into venture capital funds in 2021 because of the bubble, the amount of money printing, that
yeah. So
maybe it's a reckoning for funds?
I'm
Because look, performance
yeah.
is in
Yeah.
my opinion very tough for most funds. I mean, personally,
When
I'm
you say
very happy
funds,
with
you
my
mean hedge
portfolio.
funds, right?
No, no,
You're
I'm talking
talking
about
about
even
hedge
VC
funds
funds. So
or
I'm saying 2008 for
yeah.
hedge funds
Mm,
was, if you look at the performance, it was lackluster when you tracked it 10 years later, right? In
yeah.
2021, VC funds, especially frontier market VC funds, were funded blindly by investors. So there was a
Yes,
bubble,
there was
right?
this asset price
So,
inflation.
so
Yes.
if I do the math based on debasement, currency debasement, which is primarily the
Mm.
dollar and then obviously all of the
Yeah.
currencies, I personally, and obviously I've mapped all the portfolios of my
Hmm.
competitors and in the region. I don't see how their performance comes, right? In my own performance, I can say that I'd be
Hmm.
lucky if I can pull off a 5x, given the currency debasement
Hmm.
and the overvaluations that took place in 21. So, I mean, I'm just speaking the truth, right?
Yeah, yeah,
I don't want to
but
sell
if
like,
but my point is, yeah, so like, but my point is like, if your performance is that good in such a terrible so you notice like when you were deploying, I wasn't, right? And the reason why was because I did not believe in the valuations that were floating around. They were
true.
insane. So I largely passed on a lot of things. And what's interesting is that, by the way, a lot of those companies that I passed on that were really super hot companies struggled to raise their next
Subsequent ones, yeah.
rounds,
Yeah.
subsequent rounds. I think you are a better investor maybe than I am because you were, able to sort of navigate that and negotiate some of your you were able to negotiate and talk down a lot of your startups to like more reasonable valuations. And you've sort of built an interesting portfolio. What I would say to you, Faisal, is that, imagine if you were doing that now. You're looking at a multiple of what you've done because valuations are lower, but
Mhm.
also the opportunity is just so much bigger because we're at the beginning of this next sort of technology-driven sort of super cycle, this AI, web
But Ashad, that's
and
what was
distributed
stopping.
technology.
That's exactly what I was
Yeah,
saying. That look, that this new tech wave is borderless, right? So look,
yeah,
I
it
personally, by the way,
is.
I'll come
Yes.
back and say that I do think there's
Hmm.
opportunity in our region, but it is
There is. Yeah.
there's no it's no longer like, hey, I'm going to build a e-commerce platform for Pakistan, Egypt, and this, and then someone from the region is going to come
Yeah.
and acquire it. That was the
That's
old
kind of
wave,
done.
and we played that game, right?
Mm.
So my question is that when people are trying to repeat the same loop again, I
Mm.
don't think, and I'm doing this more for founders because as do startups,
Yeah.
I feel like people in Pakistan, oh, that happened there, so this will happen here. I'm like, no, all
Yeah.
that is like the world has just suddenly come on the same page. And now you have to go and basically compete with Silicon Valley. And again, AI agents, I think, have regional
Yeah.
place. Same thing with
Yes.
blockchain infrastructure. I mean, you need that infrastructure,
Mm.
whether it's like authentication or ID verification, whatever
Mm.
components, right? Even
Mm.
climate tech. But I think that not enough discussions are taking place, and people, at least in Pakistan, I can
Hmm.
see, maybe not so much in the MENA region,
Mm.
are looking at things. The deal flow I'm seeing is not very impressive, in all honesty. It's like still like back on
Yeah.
something that there's no funding available for. So
Yeah.
that was my question.
So I mean, if you look at our portfolio, you'll see that there are a bunch of sort of moonshot opportunities. I mean, that's kind of what we're here for. We're here to invest in sort of sort of riskier investments that, if they make it, could be, wildly successful, wild, crazy outcomes. Um, so I think that we should be seeing more interesting sort of deep tech technology opportunities. We are seeing that in the region, and I think that that kind of makes sense. At the same time, I'm going to push back a little bit on you saying that, it's over for the local regional problems
But I'd
because
love
the
to.
reality
I'm being
is
the devil's
the
advocate.
local
It's
yeah, so but like the local regional problems still exist. So there are problems in Pakistan that still exist that haven't been solved through technology that still need to be solved, for example. There are problems in the Middle East that need to be solved through technology that haven't been solved. So I think that there's still place for an area where you can solve those like copycats, I guess geographic arbitrage type opportunities. But I think that they're more interesting and more attractive now. And I guess what I would say is that, yes, you're right in one respect, which is that doing it the old way doesn't make sense now. Now, are you really integrating technology and
yes,
leveraging turbocharging technology to solve the same problems locally,
yes.
regionally?
Right.
Because the bar is much higher. I mean, the
I mean,
more time I spend in the Bay Area, my bar is like higher now. My expectations are higher for founders. I don't want them to be just building another marketplace or another B2B sort of like SaaS company that provides basic tools. No, what are you doing to solve your customers' problems
I'll give you an example. One of my
and make some
favorite
sticky? Yeah,
portfolio
yeah,
companies in Pakistan, right? And I think we're coming up on time, but I'll be brief on
yeah.
this.
We should probably
So,
switch to
uh,
Q&A, but go ahead.
Q&A. So, look,
Yeah,
I'm having them look. So, I think the front end of the internet's going to change over the next 5 to 10 years, right? Where
yeah,
basically you're going through this interface of this device that may move more to
yeah.
the glasses you're wearing. Obviously, given time, you have to need
Mm,
lots of components that have to become micro.
mm,
But so you may go move into augmented reality. So I may not be using
mm,
this device, and so it's more based on voice commands, right? So
mm,
the with the travel platform that I've invested in, BookMe, we're having debates that okay, you need to integrate with every possible major LLM, so that when that voice
mm,
command originates from Pakistan for hey, I need to
mm,
travel from Islamabad to Karachi at
mm,
this time,
mm,
your protocol is pulled, your system is pulled in the back
mm,
end, and you're
mm,
making those reservations, right? So
mm,
my point is, I'm not seeing that level of, I guess, and I think it's an evolution process in all honesty, but I think that the market dynamics have changed in terms of how people have to look at platforms. So when I
mm,
see just a simple platform,
mm,
e-commerce platform coming up again, which I don't even know why those are coming up still,
mm,
or another ed tech
mm,
or health tech platform,
mm,
it just makes me a little bit disappointed in the quality of the founders that they're not
mm.
feeling. So that's why I'm trying to have this discussion, and especially with
Yeah, and
someone like you, because
yeah,
we talk about this stuff behind the scenes. So I thought
yeah,
I'd
yeah, we do.
open it
Yeah.
up to the market.
So yeah, I mean, look, I do wish that founders would take a, the thing is when you talk to a lot of these entrepreneurs, they're kind of like running, 200 miles an hour. What I am saying, what I'm having is conversations with founders, and what I'm saying is like, hey, take a pause, stop, look around, look at what's going on. I get that you're focusing on this one particular thing, this one particular opportunity, but if you take in what's going on in the world, maybe you need to reframe what you're doing and sort of reframe the opportunity set and then sort of do something differently. So that is something that I do wish that a lot of entrepreneurs would do. Um, yeah, go ahead, Faisal. Um,
No, no,
should we
I'm
switch
pulling up
to
the yeah.
Q&A? Yeah.
While I was doing this, I was also pulling up the questions. Okay,
Yes. So
so let's see. What
I
sectors
think
are
we've
tracking the
answered a
most?
bunch of the early ones.
Yes, let's scroll down. Actually, why don't you pick a question that you find interesting in this? Um,
Yeah,
so
I think
again,
we've
this one.
covered a few of
So
these. Yeah, go ahead.
look, it goes, what funding stages, pre-seed, seed, series A, see the most activity? Well, we talked about this. Let's talk about the
Mm,
present and now, right? So this cycle, I feel,
mhm,
is slightly different, at least for Pakistan. Um, we're we're not in 2021, you had a lot of opportunistic 10% allocation that
mm.
thought, there's a lot
Yeah.
of, Pakistan's the next Malaysia or India, right? And they came in and that capital came in and it was just transient capital.
Mm.
It went out. At least
And
what
there
I'm
wasn't
seeing
enough of
from
it.
my portfolio,
Yes.
there wasn't enough of it. It created a massive bubble, which looked like a lot for Pakistan. Like it was almost like about
Mm,
half a billion to almost $750 million,
mm.
right? But from a global scheme of things, it's a drop in the bucket. And so what what I'm seeing this time, there's less seed or pre-seed capital coming in, apart
Yeah.
from maybe one or two new entrants that are still understanding tech.
Mm,
But most of it coming in is in the Series A or strategic acquisitions. I don't know in MENA
mm.
how you're seeing it changed, because obviously people want
Yeah.
a lot of aspiring founders want to move to
Yeah.
MENA as well because it's more
Yeah.
capital depth there. So maybe you can share that
So
perspective.
that's sort of interesting. I mean, obviously, an outside in looking into the Pakistani tech ecosystem, the sad reality, at least from my perspective, is that I don't see that there's a lot of capital in Pakistan today. I think most of the VC firms raised capital, deployed capital. They did what they were supposed to do, but they're tapped out. And they haven't, at least from what I've seen, I haven't seen any announcements for new funds having been raised. So the problem, the sad reality in Pakistan is that there isn't any early stage capital today because those funds haven't been raised. And maybe I'm behind, but um, in and the reason I'm saying this is because in the MENA region, we're we're quite lucky. We raised quite a bit. Dozens of new VC firms came, including mine, and we raised capital, and we have a lot of dry powder. What's interesting is that a lot of Pakistani founders at early stage are now realizing that there's no capital in Pakistan, and they're basically moving to Saudi Arabia, they're moving to the UAE, and they're saying, well, that business model, that business opportunity makes sense here as well. So we're just going to do this market. Uh, Obviously, the challenge there is that they need to understand the market. They need to have, you know, we're looking for founders that have networks and understand the local market opportunity, because it's not just simple thing about like, oh, we're going to do this in Pakistan. Well, there's no money there, so we're going to do it in Saudi. That doesn't work because you need to understand the local market. But having
So
said
by the
that,
way, Ashur, I've
we've
had
seen like Abhi, for
six companies
example,
enter. And I've seen six of
yeah.
my portfolio companies enter and execute.
Yeah, but those
Again, the
are sort
key
of
is
growth stage. Yeah.
yeah, exactly. Well, so I actually think that early stage is unless you're like in a very specific vertical,
Mm,
which is hot because most of, I
yeah.
mean, let's be honest, right? Just like there's no e-commerce
Mm,
funds being raised today for every
mm,
e-commerce platform that's raising. Let's say for every 100 investors that are out there,
mm,
maybe one is still looking at
mm,
e-commerce plays, right? So I think
mm,
again, because of Pakistan's lag effects, you barely
mm,
find investors unless it's like a strategic acquisition like InDrive or some big tech
mm.
trying to get into a
Yeah.
footprint, right?
Yeah.
But you're
Yeah.
not going to get investors from VC funds. There's a question here that I think is more relevant for
Hmm.
you. It's like, it's like, what are the emerging sectors that are poised for disruption in MENAP, right? In accounting Pakistan, I'll give you my
Hmm.
2 cents. I think it's all
Go ahead. Yeah.
linked to basically blockchain and AI, and that everything is being built upon it. I don't care if people think it's a bubble. That's
Hmm.
just it's over speculation. I'm not counting the stock market. There is a Moore's law adoption rate here.
Hmm.
Whether you look at climate tech, whether you look at basically any vertical, you even have LLM APIs that you basically
Hmm.
have integrating to travel
Yeah.
platforms, right? So I
Yeah.
think like, I would love to get your perspective that in MENAP, is that the next wave, or do we continue to do what we've been doing historically? And again, I think companies in growth
Hmm.
stage will raise capital strategically.
Yeah.
But first check, I think it's very difficult unless you're in these verticals.
So, I mean, first of all, you have to look at, so, what are the big sectors that are part of what is the sectors that are the biggest part of the economy, right? So, financial services is still a pretty big part of the economies. And so, digitally transforming them means that, like fintech should still be a big part. So, and we see a lot of fintech companies getting funded. It kind of makes sense. When you think about the crossover fintech from Pakistan, the big Pakistan to Middle East, it was Abhi Finance, which was, you were one of the earliest investors. And then my firm then followed on into that company because they moved to the Middle East. They built, a local regional business, and now we're helping them sort of scale that local regional business. So financial services makes a lot of sense. Um, we are seeing now, so that, and then of course, depending on which market, travel and tourism, it's maybe not my sector, but I think travel and tourism makes a lot of sense because it's a growing sector in Saudi, especially, and in the UAE, in real estate, in prop tech. So these are big sectors, and there are many. I'm just saying, like, these are some of the like, kind of the obvious ones. And underlying all of that, there is sort of, AI or distributed technologies, blockchain sort of infrastructure that could be leveraged to build this. And then, of course, around the growth of crypto and digital securities, then I think that there's this space that could be built out. Um,
Yeah,
but
it's
also,
I
what's
100%
interesting
agree.
is like the deep tech opportunity. So, as I said, I think we've done about four companies, four investments recently that I would classify as deep tech. And it was interesting. These are sort of like local, regional, global opportunities where it was actually diaspora that came back to the region and sort of built, deep tech companies. So that is kind of interesting as well. So we're seeing more deep tech happening in the region and more support. What I'm worried about is that is there enough downstream capital that is I mean, I'm lucky because I mean I'm as dumb as everybody else, but I'm lucky that my partner Waleed is like super smart, like technical investor. He was a semiconductor engineer. He, understands deep tech very well. So I'm lucky. How many other Waleeds are there in the region? This is my problem, Like, I mean, I do know that there
No,
are,
no,
but
100%.
I know
That's the
them, but
issue.
I know that they're not VCs. That's the problem.
So I mean
So, sorry.
that's the own my own issue I'm having, right? In the sense
Yeah.
that many times people in venture capital are just watching like random
Mm.
podcasts from elsewhere and then trying to
Yeah.
apply stuff here
It's not the
without
same.
without the
Yeah.
thought process of the lag effects or the timing and various elements, right? But
Yeah.
I honestly think that even for you and I, one of the reckonings that's come is that we all have to become a deep tech investor because now the back end
Yeah.
of the internet is changing, right? We were
Yeah.
focused on front
Yeah.
ends. Front ends are changing from a interface perspective, but really
Yeah.
the back end structure is changing in
Yeah.
distributed computing, as well as
Yeah.
tokenization, and they're not separate
Yeah.
fringe technologies. They're actually forefront technologies, and you got to. I mean,
Yes.
obviously there's bubbles in every vertical, just like there was a
Yeah.
bubble in VC and tech in
Yeah.
2021. But
But
it
the market
changes the
is changing.
dynamic. To me, it's a huge
The
opportunity.
changes are happening. So there's sorry, go ahead.
No, I was saying, look, like when you look at countries like Pakistan, right? There's a huge leapfrog effect that takes place because we don't have
Hmm.
legacy systems. So it becomes a
Yeah.
lot tougher to disrupt legacy systems
Hmm.
because they lobby, they block, or adoption is
Hmm.
slow because a corporation just spent a ton of money on a
Yeah.
legacy ERP system. But
Hmm.
when you have this new technology that's 10x or 50x cheaper and more
Hmm.
efficient, adoption takes place. I mean, the quintessential example was the smartphone versus the
Yeah.
traditional ringer telephone, right? That people waited 10 years to
Yeah.
get. And then
Hmm.
this came and then everybody had one, right? So I
Yeah.
think that's a huge opportunity, but I'm trying to open the portal up in a lot of founders to see the opportunity
Yeah.
from a technology perspective. And I
And
think
on
that's going
that,
to be interesting.
so there's this reframing. So, a lot of the local regional founders complain that, venture is about risk, VCs are about taking risks, but they're not taking risks because they want more validation. I think that's kind of a generic, unfair, maybe representation. And I can't speak for the other VCs, but I will say, like, I feel like maybe it's not entirely, it's maybe it might be a little bit unfair because things are changing quite rapidly, quite dramatically. And we need to understand, as VCs, our job is harder today because we're in a state of flux. There's so much noise, there's so much change that's happening so quickly that if you struck and you invested in one of those LLM copycats,
Like DeepSeek.
you've probably
Yeah.
written off your investment because it's changing so quickly. Now, we looked at when we saw the ChatGPT moment. Um, my view at the time was to sort of quickly extrapolate that to, okay, this is where the commoditization of LLMs begins. And that was just sort of an opportunity because the opportunity will come after the commoditization of LLMs. So to be honest, now it's very, very exciting. And obviously the DeepSeek was a great moment. I think what was crazy for me was like the amount of capital that people were saying was needed to sort of break into this new phase, which DeepSeek has shown us isn't the case. And there's plenty of other entrepreneurs that are doing something similar. And hopefully
Absolutely.
they will get some air. But now it's what's interesting is that we're still at the application, sorry, at the infrastructure layer. So the infrastructure layer needs to be built out more. Once that happens, then we'll start to see a lot more happening at the application layer on this. So this is actually one of the best times, but it will take time because, as you said, like there's a steep learning curve, and the steep learning curve
Yeah.
is not just understanding the technology. It's like what's going on, what patterns do I see, and you're gonna get it wrong, but that is why it's a little bit challenging. And
I
what's interesting is that I would say I would encourage entrepreneurs to do the detailed homework and figure it out and form a view and try to educate the VCs on what their view is, and we'll either believe you or not. And that's kind of like how we're going to go. But I'm not sure I answered your question, but
No, no.
let's
I
go to
mean,
the
look,
next question. Yeah.
I think we're
Yeah,
rapid
sorry.
coming up on time. I just
Yeah, I
got a
mean, I'm
cue from
happy to. I know that we started
we can
like
probably
five
speak for
minutes late, so we could
like
probably
five
do.
minutes more. So
Yeah, yeah, sure.
so I let's see
I
how
think we've
government-backed
answered most
funds
of
and
these
sovereign
ones.
funds impact the ecosystem. So I want to dive into this a
I
little
think
bit more.
we.
So
Yeah,
so
sure.
I think look because Ashar, you're looking at it from the outside in, right? I'm
Mm,
looking at it from the outside in, and I'm on the ground here. So
hmm
sorry, one of the things I noticed that look, at the end of the day, the governments in Saudi and UAE are
hmm
on the same page as most venture capitalists, where they've understood
mm,
that tech is now in the exponential adoption stage, and therefore they've
hmm
chosen to become hubs, right? In
Yeah,
Pakistan, when I'm having discussions with government officials, first of all, they still think tech is the IT guy managing the server room. They can't differentiate
yeah.
between and they think startups are these jokes on the side, even though like
Mm,
companies like Abhi or Postex or Nape Habal, they're doing
yeah,
billions of dollars in transactions, right? So
yeah.
it's almost like a disconnect. So I think it's a lack of understanding. And so,
hmm
given that UAE and Saudi have understood this, you're seeing the
hmm
government spend billions and redirect billions
Yeah.
into not just the physical infrastructure, but also into creating tech hubs, not as in like
Yes.
incubation centers that just are there as buildings.
Not
These are
just the real
actual
estate.
facilities
No.
with dollars and money behind it. You come and incorporate your company. I mean, I was looking at the fund
Yes.
management apparatus. I don't know why I'm using Carta. The apparatus available in Saudi and UAE now is actually pretty
It's
phenomenal,
getting
right? I
better.
mean,
Yes.
it's
Yeah.
like it's so. I mean, I think coming back to sovereign funds, I really think a lot of the growth has been because the government is forward looking. I've been to Saudi now about
Yeah.
4 times. UAE, I've spent a lot of time in. I mean, there has to be, it can't be that the entrepreneurs are smarter than the policymakers, right? I think that
Yeah.
is contributing to this gap in Pakistan. So would you say that's the
Yeah.
case, given that you're in Saudi and UAE? Are they more switched
Yeah.
on versus us?
Yes, I mean, first of all, stable governments, they have capital, and they've taken a full stack approach to building the ecosystem, which obviously is very, very helpful, right? And so yes, I think that there's a long-term strategy that's being built, and it's not necessarily clear, but every year it becomes clearer as you see, because they're diversifying their economies. They are, building, as you said, core infrastructure, physical infrastructure. They're also building core digital infrastructure and core talent infrastructure, so that, people can come and the ecosystems can thrive. And, one of the biggest things that we used to hear from LPs was where the exit's going to come from. And I
Yeah,
think this
they
is going
come.
to be a blockbuster year where, we'll start to see more and more IPOs. The next 2, 3 years, we'll see there's at least 5 companies out there just in Saudi that are, on the conveyor belt, ready to IPO. And I think that will help. The market is also going to get better because once we have these liquidity events for these startups, these that exit, you'll start to see more individual entrepreneurs either become angel investors or invest VCs with the capital and the experience that they've had, or go back and build something of their own. And they're much more experienced entrepreneurs today because they've learned something from
It's that same cycle,
zero
right?
to.
In other
It's the same
markets. You
cycle. So we're
invest, you
early.
sell, you
Exactly.
build again. And
Yeah.
I do agree it's 100% patience
Yeah.
quantum. So look, on a
It's it's
positive side, I'll
it's
tell you with
patience
Pakistan.
at long term. Yeah, it's patience, it's long term, and capital. One of the things that, I've only looked at, like Pakistan from like a little bit through you, and what I found is that, I found that it's disappointing because what they provide is, I mean, they don't really seem to understand, at least from my perspective, and this will probably piss off a bunch of people, but I don't feel like the people who are building the ecosystem understand how to build an ecosystem, because they're offering things that, you know, you need to provide capital if you
Yeah.
want people to. invest in your ecosystem because you need to give them something to try your ecosystem to see whether they like it and whether there's opportunity there in order for them to sort of invest the resources that they need to sort of look into the ecosystem. So I think that there is something that's kind of missing here. You kind of look at what I've seen is that the policy players are looking at it from a surface level. They're not really providing the support that they need to be providing
It's
to
photo
do it,
ops.
and they need to. It's
That's it.
yes,
It's just photo ops, nothing else. They don't actually follow through,
photo ops, a lot of
or
PR,
they're
and
helpful
yeah,
with
that's sort of
regulation.
disappointing. Yeah,
They're helpful with regulation. I mean, they have been very helpful on the regulation side. But and by the way, there's no shortage of money in this country. There's a massive, huge black economy, and when the government has to, it can
yeah,
spend billions of dollars on like random
yeah,
development events, right? So I think it's
yeah,
just a lack of understanding. But I think things are changing slightly. I mean, my recent
yeah,
engagement has been pretty impressive. So let's see how things play out. Ashar, I think we're coming up on time.
yeah,
You and I can go on for hours. Maybe we
yeah,
should start
yeah,
recording those Zoom calls that we have on our own and start putting them out to the
yeah.
public. Because I think more of these conversations are
Maybe
needed
edit
to.
them, edit out the F-bombs and
Yeah, yeah,
frustrations.
exactly. Well, we'll just put the little tone, the tone in there to cover it.
Yeah, yeah.
So, but
Great.
always great to catch up with you. When I'll see you soon when you're back in Dubai, and we'll
Yeah,
catch
I'm
up.
I'm
And
there next week. So
okay, perfect. We'll coordinate.
it was a
All right,
pleasure being here.
yeah.
Yeah, thank you.
Thank you, everyone. Thank you, Asher. Take care. Bye.
Thanks. Take care.